Kunal is ready and Nooresh is also ready. Gentlemen, good morning. Nooresh, good morning.
Good morning.
I can't hear you, Nooresh.
I think you can hear me loud and
Now
clear
I
now.
can hear you. Now, yeah, good boy. Okay, Nooresh, what is in store today?
So again, the consolidation should continue. The first target on the downside was done yesterday. So breaking below 19,550, 600 opened up a move towards 19,300, which was the last cluster. And that now remains a short-term support. So for now, it becomes a case of the range shifting. Ideally, if we were going into a deeper correction, there should have been more follow-up and breaking down below 19,300 faster. So for now, we expect a bounce towards 19,450 to 550 range. And once that happens, then review whether we can sustain above those levels. The only case, the reason we do not look at a major correction as of now is because most of the index names do not have a similar structure like Nifty. You have HDFC Bank, which has not crossed all-time highs. You have a Kotak Bank, which is still 20% away from all-time highs. So a lot of the index weights do not have a chart structure very similar to the index as such. So in that case, we could continue a consolidation and we get into a new sector rotation. So start to look out for stock specific moves in the index heavyweights. We are seeing oil and gas take a lead. We are seeing smaller banks taking a lead. So for now, it is more stock specific. Index could continue in this range of 19,300 to 19,550 for at least a couple of sessions.
All right, Kunal, good morning.
Morning.
Gale mein kharash.
Yeah.
Big slow.
Early morning.
You
weather.
remember that ad?
Yes, of course.
Classic ad, but it's Friday, I think, so that's why just getting into that mode, right?
Hopefully. And hopefully if the market also gets into that mode, then I think it adds out.
It is a bull market correction, very sharp, very swift, very turbulent. And before you realize it, it's over.
Yes, it is. Because, in an actual turnaround, you wouldn't get a time to exit the stocks which you're holding. So in this leg of a trend in the last 2-3 days, we saw first 200 points correction, very slow, gradual on the index, and then the last 200 point correction on the index from 90,500 to sub 300 mark, which we hit yesterday. The pace of correction intensified. The stock started to get into a sharper swing on the downside. There was some news flow which was attached, which created some sort of, if I can use that word, panic for many market participants, that maybe the best could be behind for the markets. So when all of those reasons come out at the fag end of a correction, that's generally a time when we typically call it as a bull market correction, because either a bull market reversal or a sharp reversal doesn't give time to exit. Now the most important point was at the 90,800, 900 mark, the premium for the index futures reduced from 140 points. We started off the series at 140 points to almost 80-85 points, and on the way down yesterday, when the Nifty was sub 90,300 mark, the premiums actually shot up back towards 110 points for the Nifty, and in fact it jumped from 150 points for the Bank Nifty to 250 points on the Bank Nifty. So that generally indicates that the flow for the market participants was on the bullish side yesterday, sub the 90,300 levels, and that's where we've bounced off on the indices. I would expect that 90,300 should now be a decent short-term support, and we should hold on to that level.
Okay, so 19,300 is a bit of a support, but it's definitely a bull market correction, so need not get worried.